I mean, I really put it out there that this is a class that I think everybody needs. This is a class you almost need once a year as a reminder and as things change. So hopefully we'll have good attendance, and those that aren't joining us, you guys will be well educated so you can hold a class in your office and explain the importance of knowing how to read a title commitment and knowing what to look for on a survey, what questions to ask to know whether or not a new survey is going to be required. All of that matters whenever you guys are setting expectations for turn time. So you guys, sometimes part of the negotiation process is the amount of days that you're putting in there for closing. Don't set everybody up for unrealistic expectations. If you're going to need a survey, have a pretty good idea you're going to need a new survey, and allow enough time for the surveyor to do a good job. And if you've got some title issues, allow enough time for the title company to resolve those issues. So grab a couple of your teammates and make them watch and listen, because the more we're educated, the better job we all do, the more professional we look as an industry, which is why education is so passionate. I'm so passionate about it. All right, we're at 29. That's probably, I think that's about what we had in RSVPs. All right, so hi, Michelle Castle with Guild Mortgage. Thank you so much for joining today. As I just commented, education and providing you guys the resources and tools to be highly effective in your business is something I am very passionate about, which is why I do these trainings. This is the last in the success series. So there's a success series that we do that is a weekly CE in the spring, and then we'll do it again in the fall. In the fall, likely we will do it in person at in the Sherman Greater Texoma Association of Realtors. If there's enough people requesting for me to do it also virtually, I will also do it virtual. If you are here today for CE, be sure you chat either to myself or to everybody, however you want to chat. I need to know your name as it appears on your license number, and your email address. It would be nice if you also give me your cell number so I can send you reminders whenever we have additional classes. I will probably convert and continue to teach classes on a monthly basis. I am coming to there's quite a few offices that I will be doing some in-office trainings starting this month, actually. And I am putting together a whole list of classes. If you are wanting some in-office trainings, I have, we can talk about that. But if you go to michellecastle.info, you will see a list of all of the classes that I have available. I'm about to start a podcast, and I have a TV show that I do, and all kind of other fun stuff too. All of that is linked on that michellecastle.info. That's just kind of what is Michelle up to, because there's no telling. And it's the easiest way for me to figure out what I'm up to. Today, we're talking about title commitments and the importance of knowing how, or understanding the title commitment. I think everybody in this, I think this should be a mandatory class before you get a license. You got to understand titles in Texas are phantom. I mean, we don't literally have a title like you have a car title. We don't, but it's as close to Carfax as you get in the real estate industry. And knowing and understanding the history of the title is super important. That's the job of the title company, the backside of the title company. That's where all of the real work is done. Sean's job is easy. He just has to go over numbers. But the backside is all about really digging up the history and making sure the title has transferred correctly in the past, so that the title commitment, the title policy, the commitment is just like an insurance binder, but the title policy is based on facts, and it is based on the research done to prove that the title was clean and good, and all of the issues resolved prior to that title being transferred to your buyer. I think title policies need to be done on, it doesn't matter if it's a $5,000 lot, which those don't exist anymore, a $15,000 lot that someone is paying cash for, title is still important. Those don't exist anymore either. But let's just pretend this was 2 years ago. So it's just super important that you know and understand what goes on behind the scenes so that whenever you get a title commitment and you're looking at schedules A, B, and C, you know what you're looking at and you can prevent those problems. Like I was just saying a while ago, I'm going to be teaching a class on the 7 habits of a highly effective real estate agent in the coming weeks. And number one of those habits is to be proactive. Being proactive to me means really preempting and preventing any of the problems that might arise. You know, proactive also means managing expectations and emotions. And we all, I think, have responsibility for doing all of those things as real estate professionals. One of the toughest jobs we have right now is managing emotions. Well, waiting to the last minute to discover a problem is not managing emotions in a very proactive way. And most of our transactions blow up over unrealistic expectations or emotions not being managed. If everybody could remove the emotions out of a transaction and really think logically, a lot of our transactions would get worked out and everybody would end up at the closing table. Maybe not on the day that they expected, but they would still get there if we could just remove the emotions. Well, part of removing the emotions is predicting and preempting problems. So that's why I think that this class is super important and everyone should take this class. What I want to talk about first, so Sean Kincannon is with Red River Title, right around the corner. He grew up in the title business. His mom owns the title company and just one hell of a closer. So if you guys are ever have any questions on the title side, he's a problem solver, just like we are at Guild Mortgage, which is really pretty kind of, I mean, we don't like problems, but it's really kind of a challenge to figure it all out, and we always do. So without further ado, I'm just going to introduce Sean to you, and he's going to tell me what he needs me to do in order to help facilitate this call. Thank y'all all for being here.
I haven't looked at all the lists. I think I know everyone on here, or most of you. And if I don't, as she said, my name is Sean with Red River Title. We have offices, I'm not on the screen. There I am. We have offices in Sherman, in Anna, and in Whitesboro. So if I haven't had a chance to meet you, next time we're at an event, please introduce yourself or allow me to introduce myself to you guys. So it's good to virtually meet those of you that I haven't met yet. So, and Michelle gave me a fabulous introduction. I don't know if I deserve it. I don't know if I qualify for some of the things she said, but thank you, Michelle. So real quick, I'm going to give you a quick thing. We'll talk about surveys first. And before I even start, I just want, I don't know if many of you saw this morning that Sherman Denison was ranked the top Texas city in regards to the increase in value from 1 year ago to today. So we're literally in one of the hottest markets in the entire United States. So it's kind of unbelievable to think about our little area kind of blowing up like that, but we've talked about it and it's actually happening. So to me, ironically, that does come into play when we talk about surveys, because we have so many Metroplex agents that come down and they say, that's not how my title company does it when they do business in Dallas County, Tarrant County, Denton County, Collin County, et cetera. Part of that is because of this growth. Our county is less commercially developed than those larger counties. So we deal with more rural surveys. Even I consider rural surveys inside the city limits. In other words, in an unsubdivided, or some of these cities like Howe and Van Alstyne never enforce their own subdivision rules they've had in place for hundreds of years. So surveys don't always match up to what people think they do. They're just not as clean as areas that are a little more developed, especially because our communities are very old up here too. We have no communities that are less than 100 years old, essentially. So anyway, we're going to talk about surveys first. Is this already shared, or how do I share that?
Nope.
She's going to share a, what do you call this? A PDF, and we'll go through it together. And she'll tell me if we have questions along the way, if we need to stop and answer them, or if you want to write them down and we'll go down the line. We'll answer them all at the end. I don't know. What do you think is better? Answer them at the end or as we go?
I think it's easy. Well, for this subject, I would answer answer the questions as they go.
Okay.
Because it's probably yeah.
Okay. So do I just click this button to go down?
Mm-hmm. Yeah, but it's going to slide because you got it as a PDF.
Oh, okay. Sorry. All right. So most everyone knows what a survey is. A survey is how a land is basically drawn. Okay. It's a description as well as a drawing of the improvements and the boundary lines. So that one's pretty easy. I don't need this. So we're going to start right off. I'm going to rip the Band-Aid off and talk exactly the number one question I ever get. Let me also say this. Currently in Texas, there's more claims related to surveys, okay, than there are other common claims like claims of ownership of family members or illegitimate deeds, those type of things. There's more claims related to surveys than there is anything else going on right now. So you're going to see, well, it's already happened. You're not going to see it. It is happening where title companies are tightening up on surveys. And I'm going to go through some of that with you, as well as some specifics about local surveyors here, which we have fabulous local surveyors. So first thing, paragraph 6A8, okay? You're going to see when we talk about title commitments, a standard title policy, owner's title policy reads exactly how this paragraph reads at the word to quote, discrepancies, conflicts, shortages in areas, boundary lines, encroachments, or protrusions, or overlapping improvements. So the option that is laid out here when you're negotiating a contract is having the final title policy to be issued amended to strike through, quote, discrepancies, conflicts, boundary lines, encroachments, or protrusions, or overlapping improvements. So the title policy will or will not be amended at the expense of buyer or seller. Okay. Every title policy, again, has that in there. If you're paying to have it removed, then you're in effect getting more coverages for the buyer on their final owner's policy. Shortages, those three words, shortages in areas, remain on the final policy, but all the other items will then be added as additional coverages on an owner's policy. Okay. That's what you're negotiating when you're negotiating this item in a
Put
contract.
that into real property fence
So
shop.
the first thing I'll say, let's talk about cash transactions first, because I cannot issue this coverage on a title policy without a valid or accurate survey. So many times I get a cash transaction where the realtors say they don't want a survey, they just want to close without that. Well, if you mark that the title policy will be amended, we have to have a survey. Obviously, when you have a mortgage, you also have to have a survey. So if there is, moving forward, a discrepancy in the boundary line, a discrepancy on an encroachment, whether it's the subject property has an encroachment onto the neighbor or vice versa, overlapping improvements, maybe it's a lot line house and something with the corner is overlapping. Obviously, if we're looking at a survey, we're going to know if those things exist, right? This coverage gives you, or gives your client or the buyer, the owner, someone in their corner to defend against those claims.
Okay, so let's pretend. Here's a scenario that has happened.
Okay.
You have a surveyor come out.
Okay.
And they put flags out.
Okay.
And the neighbor goes, oh, hell no, that's not where the boundary line is.
Okay.
If that happens after the title commitment is bound and you have a policy in effect,
Correct.
which means the transaction has funded.
Correct.
Then you have protection through the policy.
That's right.
For that discrepancy or that disagreement with the neighbor.
That's right. At that point, when you've been approached by a potential claim limited to this area, you then bring that discrepancy to us as the title company. We're going to review it. We're going to talk to the surveyor about it. And then we're in your corner to fight for you or the property owner to defend the position that we have, which should be the same position you as the owner has against that neighbor. So we're going to take over that battle for you.
So without that coverage, you don't have that protection.
Theoretically. Now, there's some things that are still covered, even though, and I'm not going to try to bore you or even talk over my own head for that, but that's correct. Okay. Essentially, it's not assumed to have those coverages if it hasn't been paid for and negotiated in the contract.
Okay.
Okay. And then going down, we're still on this. So don't think if you have questions, we're not leaving it yet. The next few slides kind of further outline what I just said. So you'll see that the promulgated language in the title policy reads as the contract reads right there. A current survey with proper certifications and a T47. If you don't know, a proper survey obviously has to be accurate. That's what the T47 is going to tell us, but it needs to be signed and sealed by a surveyor that is a registered surveyor, obviously. Has to have a surveyor statement, has to have the directional so that we know which way is north, so we know the property, or so we know the direction that the property lies, excuse me. And obviously it can't be cut off, all those other kind of what you think or that everyone knows, but you'd be amazed how many different versions of surveys are presented. So that's an acceptable survey. Going on to the next page, you'll see, so this is how the final title policy. So assuming we have a good survey and someone has paid for that
But the
coverage.
T47 has to be signed and
No.
notarized.
During COVID, we were making exceptions for non-notarized versions of T47s. I don't know that that's necessarily been lifted yet. So the best rule of thumb is to get it notarized if at all possible. And if you have a valid explanation of why it can't be notarized, not just us, but I think any title company can take that case by case. Now, as further we get it removed from COVID, it's going to have to be notarized. So anyway, this is how the final title policy would look, assuming all those conditions have been met. So in other words, you have a strike through, shortages in area. All that means is that a title policy does not cover the final square foot measurement of a property. Okay. So that's why shortages in area remains as an exception, if you're curious. Now, paragraph 6C, which I think it's not even paragraph, is it still 6C? With the changes, I think it's been moved, but it reads the same. Yeah. So I still, this or section 1 has been the same for a while, but I'm still going to hit on it. If number 1 is checked, a seller must provide an existing survey to meet the second sentence of that very same or the third sentence of that very same paragraph, which is if it's not acceptable by us and or a lender, who's going to pay for a new one? I can't tell you that this paragraph has been this way for 8 or 9 years, maybe longer. And I can't tell you how many times a seller doesn't provide one. In the last item is checked as a buyer's expense, and the listing agent will tell me it's the buyer's expense, and it's not. If you don't provide the survey, then it's automatically a seller's expense. So just be clear, that still comes up is the best thing I can say about
Put it on
that.
your calendar, because I promise there are some buyer's agent that knows when that deadline date is and knows when the buyer's off the hook for paying for that new survey.
And look at the very last second half of the last sentence. Buyer shall obtain a new survey at the expense no later than 3 days. So the buyer can just order, the buyer's agent can just order a new survey at the seller's expense without a listing agent having any say so if you don't address that early on. So don't even check number 1 if your client isn't 100% positive they have a survey, whether it's acceptable or not. Don't check it if your client does not, if you're the listing side, you don't have a survey in your hand. Okay. That's just my tidbit. And then obviously 2 or 3.
In the lender instructions to the title company as to whether or not the buyer is going to pay for the survey is determined by this paragraph in this section of the contract. So those instructions from the lender, if there's a mortgage transaction or a bank transaction, is going to be determined by how you guys fill this out and the timeline in which the information was provided.
So in going back to a cash transaction too, I still recommend that this is filled out, even if you go to special provisions and say if a survey is needed. What I mean by that is, again, going back to cash transactions where that coverage and 8A is not being requested, or AA, is not being requested. I would still check one because sometimes a survey is needed to determine a valid legal description. So still, just be careful when you're negotiating these items. And also a survey and a T47, going back to that, excuse me, has to be provided if you check section 8.
Hey, can I cover a misunderstanding often? I think oftentimes title companies are misquoted. Or it's taken out of context.
Sure.
The lender does not determine when a survey is needed. However, the lender does require that we have full survey coverage. So if the survey that exists in the T47 is not acceptable to the title company to provide full coverage without the exceptions, a new survey is going to be required. It is not the lender making that determination, but the lender does have to have full title coverage. So that question often falls back on the lender, but we are requiring that your buyer be protected from a legal, from the boundary lines, the easements, all of that protection needs to be there.
And let me just say this is why I love working with local lenders like Michelle. You're going to get Quicken is notorious for this. For example, you're going to get a lot of online lenders or just lenders misleading your buyer by saying, oh, we don't need a survey. But as Michelle just said, they don't need to look at a picture that's drawn and signed and stamped by a surveyor, but they want us to provide coverages that only a survey would allow for us to do. So just to kind of piggyback on what Michelle said, don't believe a lender every time they say they don't need a survey, because they're going to ask us to issue coverages that only a survey would allow us to do. About the only lenders that don't need surveys would be a local bank doing a bank loan. A lot of times they can waive that requirement, but they're about the only ones. I run into very few lenders that don't want those coverages that Michelle just talked about. So if you're dealing with, and I think most of you know that, but if you're dealing with a mortgage company, just be prepared. A survey is needed. And let me just say this: I don't know, and appraisals, gosh, they're $600 now, aren't they? They're going
They're 800 to 1,000.
Yeah. So to me, a
Do
survey.
you guys hear that? $800 to $1,000 for appraisals to get appraisals.
I had 1,100 yesterday or 2 days ago. I thought it was 2 surveys, and the agent said no, it was a rush
To your
fee.
appraisal?
So
Yeah.
no, it wasn't 2 appraisals. It was $1,100
Yeah.
because it was a rush.
Yeah.
Surveys. I've never understood in my 17 years of why this is the one item that everyone is so adamant to try. I mean, if you're looking at a crappy survey, you can't believe how many agents want us to accept a crappy survey on behalf of their client. It's $500 for a new survey. I mean, unless it's rural in a large tract of land. If I'm a buyer, I want that peace of mind that I'm looking at an accurate survey, even if that means there's a piece of crap building in the back that's been added or removed or whatever else. It's a nominal expense when you're talking about a $250,000 investment. Another $500 for peace of mind is worth it. But that's just my 2 cents. So, well, and here you go. Why obtain a survey? I think everyone knows all these things, but if there's any question on what your buyer's buying, that's one reason, because this is a more accurate depiction of what your buyer's buying more than an appraisal is, because an appraisal is just a picture of the improvements and inside and stuff. So we kind of already talked about the lender requirements.
Yeah, in 8 minutes, be sure you're wrapped up. So
Okay, we're almost done.
Yeah.
So the next thing is, how much does that coverage in 6A8 cost? Okay. Residential is 5% of the owner's policy. If you don't have an owner's policy little wallet thing, or you don't have our app, email me or Michelle after we're done and I'll get you those things. 5% for residential, 15% for non-residential. Non-residential would be even unimproved lots, obviously commercial deals, land deals, anything that doesn't have a residence that someone lives in is non-residential. Okay. The T19, without going into, this is for the owner's policy. It's additional. There's even more coverage in addition to 6A8 that can be purchased. So if you're looking at a property, there's a little thumbnail of a description there. In this case, this little pool house appears to be not quite on the boundary line. It's inches away. So that may be an example of where a buyer may want to continue to purchase extra coverages. We're relying on the accuracy of the survey here, but you're getting someone in your corner if this survey is inaccurate.
For a nominal amount of money.
For a nominal amount of money. That's correct. The T19 endorsements. So these are for lenders policies. I don't know if I have any lenders besides Michelle on the call, but okay, cool. So this is the loan policy, the T19 coverage, which is one of the coverages the lender asks for on their policy, is 5%, 10% on owners. Why obtain a survey? Obviously, like I said earlier, it is a depiction of the entire tract of land your purchaser is buying. It also shows the legal access they have. On a lot and block, a driveway is pretty standard, but you never know, especially on rural transactions, what the legal access is. It's not uncommon to get a survey whose address is 5th Street, but when you look at a survey, their access is 7th Street, and a survey is going to reveal why that is.
I have a quick question. What about easements? Are those treated differently?
Well, easements are typically exceptions on a title policy, right? In other words, it depends on the type of easement that you're talking about. An access easement is going to be included because we have to make sure that our insured has access. So would a lender. So access easements are covered by a title policy. Easements to utility providers are excluded from title policies, and they're pretty standard, by the way, to have those standard utility easements in platted subdivisions. Is that kind of what your question is?
Yeah, the scenario I'm dealing with right now is I had a client that closed in December on a property up in Whitesboro,
Okay.
and we had to get the survey updated. and everything went fine. So it, delayed the closing by a week or so, but we got it done. A month later, the local utility company for the water sent them a letter wanting them to sign an easement agreement, which isn't reflected on the survey that we had updated. So they're dealing with that right now.
Did they have water before they closed, or is this, did they apply for
yes. No,
Okay.
no, they did. And my understanding is this easement that they want them to sign off on has been in place for years. It just didn't show up on the survey or through that process.
Sure. So Whitesboro, kind of transitioning over to Bells and kind of that little area between Bells and Whitewright, there in all those outlying small towns have a lot of private water supply companies. Also electric, like GCEC, co-op electric providers. It's very common, and I'll even say what you're dealing with or what your client's dealing with is similar with GCEC with power lines. It's very common, or was very common, that these utility providers were providing the utilities, but never in their original agreements, when they originally put the meters or the power poles, et cetera, out there, that they never had their client sign an easement, or if they had them sign it, they kept it internal and not filed of record. So there are understood easements sometimes with utility providers that I'm the utility provider and I'm providing a utility to you, or even not just you, but your neighbor, and I'm going to maintain that these utilities are in working order. Those are slippery, and what your client is dealing with is slippery. But ultimately, it is common for a utility provider to seek that easement. And if they're new, every new water easement in Kentucky Town and Whitewright, they actually have you sign an access easement agreement just for transferring service, even though they already have one. So it's not uncommon to deal with that. And if they're within a few years old, they're having them sign them more commonly now, and filing them, which would now show up on a survey. But I'm not surprised. I guess that doesn't really help you, I know, but I'm not.
Yeah,
surprised.
I think what was odd, I think, was there was another easement for the water on the backside of the property, and then this one just popped out of nowhere. And maybe I can talk to you offline about this, because they actually closed with you guys up in Whitesboro.
Okay. Yeah. After we're done, send me the property address and I'll look at it, and we can talk some more.
Okay. Thank you.
Cool. Thank you.
Great question, though.
It is excellent. Okay. So I kind of hit on this. If we have a good, clean existing survey, no big deal. We have a surveyor that passed away 5 years ago.
Yeah, something like that.
And was a terrific man, a terrific pillar of our community when it comes to what he was willing to do, not just for our real estate community, but the community overall. And I won't say his name, nothing but respect for him. He was a wonderful, wonderful person, a wonderful surveyor. But I know it's not just us. A lot of title companies have gotten away from using his existing surveys because he's deceased, so he can no longer defend any inaccuracies that may come up. And unfortunately, there's been a lot of inaccuracies that have come up, especially the last 5 or 6 years he was doing business. And not just his, any older surveys, they're just going to be case by case. First, they need to be clean. They need to be legible. So if you've got a survey, especially those big, 11 by 17s, and they've been shrunk and scanned 3 or 4 times, they're going to get harder and harder to read. So they're fluid. I think that we're the same as at least the other local title companies in treating those case by case. But if you have a clean survey and an accurate survey, existing survey, that has all the things we talked about earlier, the surveyor's clear signature and seal, the compass and the surveyor statement, then we typically will accept those. But they're just going to be case by case.
My recommend, when thinking of the 7 habits of highly effective people, real estate in this topic, is being proactive in finding out in the very beginning when you take the listing, get a copy of the survey, check it out, make sure it's going to be okay. If it's not, let's get this taken care of up front. Surveys take too long to wait to the last minute to find out that the title company is not going to provide the coverage that is necessary with the existing survey. Don't wait to the last minute to provide that information.
Get it. I mean, I've said this since I've been in the business. If you're doing at a listing appointment, before you even make the market or make the property live, get a copy of the survey. Get it taken care of then. That way, when you're negotiating, you know the position you're going to be in as the seller's agent. I can't preach that enough. And onto the second page, or the next page, which kind of talks about it more too. The other reason I said getting a new survey even if you have an existing, for peace of mind, is worth it because of the very next thing. A surveyor's certification is only to the parties of that survey. So especially when you get two generations removed from the original party listed on there, that surveyor has no, even if they made the biggest mistake on a boundary line or a location of an improvement, they've got no liability to ensure their own work. So you can have a surveyor tell you to their face, yeah, I screwed up. Nothing I can do about it with you though, because you're not my client. I didn't do that service for you. Another reason why getting new surveys shouldn't be so difficult, in my opinion. But again, that's just me. I just realized my head is right into the camera, so the glare to these people is really bad. I'm
Yeah,
sure.
they put sunglasses on.
Okay, good, thanks.
Um,
Must have an accurate T47. I still get T47s where the paragraph 4 is left blank. You've got to put in none there because that's the instructions of the document. So if the survey is accurate, put in none. Also, if you are 2 or 3 generations removed and you're looking at a survey where an above ground pool's been added, but it's not on the survey, but your client didn't add it. Technically, your client doesn't have to put that they added or that an above ground pool has been added because they're not the ones that added it. It was done before they bought it, but you're misleading us and you're misleading a lender, not to mention a lender's going to get an appraisal. They're going to say, I see a pool on an appraisal, but I don't see pool on a survey. And
Again, preempt, be
yes,
proactive.
Now we're ordering a new survey 2 days before closing and delaying it by 3 weeks. So just be very diligent with those. And that's really it. Those are the copies of a T47.
Does anybody have any follow-up questions in regards to the survey? No. I am going to unshare and pull up the Schedule C. One thing I want to be sure that we talk about, Sean, is all of these solar panel liens that are popping up that the seller has no idea it is a lien. And we get down to closing and now we can no longer close or the net sheet's not right, or you get people totally upset. This is not cool. Oops, that's the survey. So be sure to cover that as well. Anybody else on the title side have something they want to be sure that we cover, and I'll write it down? Okay. All right. Well, we're just going to surprise you with good information then.
All right, I'm going to zip through this too. This won't be, there's a couple on here that we'll hit on that are people are mostly interested in. So I can't say strongly enough, no matter what side of the transaction you're on, listing or buyer side, look at the commitment when the title company sends it to you. Hey, there I am. Hi. Look at a title commitment when you get it, whether you're on the buyer side or seller side. It's very important because I get a lot of calls from one agent. They have questions about it, and the other agent says, why is the agent asking me these questions? Well, if you look at the title commitment, it'll clearly tell you why. So look at it no matter what side you're on, it's important. Schedule A, you'll usually have a jacket first that says the underwriter. Believe it or not, customers do ask about underwriters every now and then. Most of these underwriters, or some of these underwriters you've heard of, some of them you haven't, but they all meet minimum, qualifications. So Schedule A, the first page, we have these little catchphrases. A is for about. It describes who's going to be insured, type of insured. So obviously an owner's policy, the insured is the buyer. The lender's policy, the insured is the lender. The main thing to look on there is the vesting too. Is the seller on your contract the person identified as the vested owner?
All right, so I've
important.
got some of my team members on this call. I want you guys to get in the habit of looking at Schedule A, making sure the seller on the contract is matched with the title commitment Schedule A, because if not, we're going to need an amendment to the contract so that it matches. Same thing with the buyer's name. Make sure that the title company, a lot of times the contract is written with a husband and a wife, or a husband and a borrower and a co-borrower, and then we remove the borrower or we add a borrower. It has to match the contract. So this is, again, be proactive and prevent any of the last minute rush around, get an amendment signed. Agents, you guys need to be paying attention to that too.
And the last item, and the very last item on Schedule A2 is the legal description. You want to make sure that matches your contract. That's what's going to show, hey, you got the lot number wrong, or something's been replatted or something to that effect. Excuse me. So
now, what I want to point out on this too is, you guys, whenever you get a survey at the last minute, you go, woohoo, we can close. We got a survey. Wrong. Because once we get a survey, then the title company now has to review that survey. They've got to review that the underwriter has to be okay with that survey.
That's right.
And so that has to, it's like submitting a loan condition to an underwriter. It's the same thing. It has to be reviewed by the underwriter. The underwriter has to be okay with the easements or the setbacks or the whatever and everything that is on that survey. Then the commitment has to be updated to match the survey. Then the title commitment comes back to us. Guess what we got to do? We have to process the title commitment and add it to the loan package. And if there's any discrepancies or issues, we have to send it back to our underwriters. So it's not just party on, we got the survey, let's close in 2 hours. Please know and understand, whoever's unmuted themselves, mute yourself. Please know and understand what has to happen behind the scenes. It is like Tasmanian devil the last 48 hours of a transaction, trying to behind the scenes between title, closing, the attorneys, and the lender's production team, getting it all put together for closing, and the survey is a large part of that.
That's exactly right. In that legal description, the lender literally copies and pastes our title commitment. So that's, they've got to have that final survey because that impacts that. Schedule B, the second page, our little catch, B is for beware. These items are the items that are not covered by a title policy. Go to the next page. So first thing, excuse me, especially if you're a buyer's agent, excuse me, are there restrictions? That is shown on the first page of Schedule B. Thank you. There's on the first page of Schedule B, those items, typically we as a title company, most title companies do the same thing. We will attach, when we send out the title commitment, a copy of those restrictions. Very, very important. If you did or did not know that there was restrictions, that your client looks at those restrictions. If those restrictions say no mobile home and you're closing a mobile home that already exists, or your buyer wants to put a mobile home, or they want more than 3 dogs, or they want pigs or chickens, or whatever it is, those restrictions are going to tell them if they can't do that. Now, just because it says they can't do that, don't give up yet. In your contract, you have an objection period. That's what that objection period is for a buyer and seller to negotiate the items that are shown in restrictions. Okay. But you got to read those restrictions. Sellers, did your client tell you that there was restrictions? Because if they didn't, and now there are, you better hit the brakes, find out what they are, because that happens more than you know.
There are some neighborhoods, they don't enforce it, but I remember moving into a neighborhood and reading Schedule B, and they were specific on the roof type. So you have to pay attention to Schedule B. Do not file your title commitment away and check the box of received. You've got to open it up, read it, don't skip Schedule B.
That's right. Then there's some promulgated items. So right here, real quick, item B2, this is the reference that you saw in paragraph 6A8. This is how it's going to read if that option is not purchased. You're going to see it on the other slides you saw earlier. It shows that it's crossed through that number 2, any discrepancies, it's that is struck, whatever, through on the final policy if it has been paid for and we have a valid survey. So this is where that appears on the final policy. There's a couple of more promulgated items. We don't insure survivorship. We don't insure community property. So if Michelle Castle is buying a property and she doesn't have her husband on the contract or on the final paperwork, that doesn't mean it's not her marital homestead. We don't cover it. That's her business. Okay. That's her and her husband's business, right? Water rights are not covered. We will help facilitate water well agreements, those type of things, but any utilities really are not covered by a title policy. So going back to the gentleman's question earlier too, now easements are one thing, but the application of utilities are not covered by title policies. Tax exceptions.
Yeah.
So in Grayson County specifically, but pretty much all of Texas, taxes are in arrears. We take exception to the current year's taxes all the way up to the point that taxes are billed in Grayson County. In every county other than Grayson County, that's typically the first week of October. In Grayson County, all bets are off. The current year's taxes up to the point that they are made available are excluded from our title coverage. In other words, we do ensure that property taxes are current up to the most recent year, which, so as we sit here today, would be 2020. We ensure that we're delivering title with up to and including 2020 paid, not 21.
I want to pause right here and just explain something from the lender's point of view. If you have a customer and we're escrowing their taxes, we as Guild Mortgage, since we're servicing the loan and we literally physically get the phone call when people's payments go up because of taxes and insurance, we're going to, again, the first habit of being a highly effective person, we are going to do our very best to predict what those property taxes might be moving forward. So your transaction is going to be property taxes backwards, but we're going to escrow in our escrow aggregate, and all of those, all the calculations we're going to do is predicting moving forward. What are property values doing right now? They're going up. So our escrows, and that's a battle that we fight. If we're competing with an online lender or someone who doesn't care about your buyer experience, they're going to set up escrows based on what's existing. And that's going to put your buyer in a bad position when taxes come out. So please know that when you're doing your prorations, it's taxes back. When we're doing escrows, we're taxes forward. So that sometimes causes a little bit of we do the best we can to explain that to buyers. Escrows are very confusing, but the better you guys understand that, the better it is for all of us, because we can clearly communicate and set realistic expectations. If you aren't sure what I'm talking about, or you're not sure how to explain that to your buyer, send me an email and we'll hop on a Zoom call and I'll explain that to you. That is super important. And Sean knows the difference and will point that out whenever they're doing the closing transactions.
Also on this slide too, and she's exactly right. It comes up all the time. If you see prorations are one amount and the escrows are a vastly different amount, question why. Are there exemptions that the seller has, the buyer doesn't have? Are there exemptions falling off? Another thing to be mindful of, and it's on this slide, rollbacks. As a matter of title commitment, rollbacks are not included in the policy. They're excluded. If you are negotiating a property, a rural property that's in an ag exemption, but you're looking at something that your client is buying that's less than 10 acres in Grayson County, less than 5 acres in Fannin County, et cetera, you need to know, are rollbacks going to apply? And this is a song and dance with every county's appraisal district, because the last thing you want to do is call and trigger a rollback too. But the contract is promulgated to read that whoever changes the use is who's responsible for the rollbacks. Okay. I can tell you title company's not responsible. I can tell you lender's not responsible. So when you're negotiating these contracts or under contract, be mindful. If you think rollbacks apply, ask the title company, okay? Ask the seller if they've already had discussions with the county. Just beware, because they're going to bill the owner, even if the seller is responsible for them. So that way, now the contract survives closing. You guys know that. Just be mindful of rollbacks if you're looking at a property.
And it's going to affect your lending transaction, and not all lenders are okay with the rollback liability.
Yeah.
From a lending perspective, if I've got an FHA buyer and they're using a grant and they have zero funds left in their bank account and they might be responsible for rollback tax, guess what? It's going to be a problem, because we have to know that if the buyer were to get a bill for that rollback tax, they could write a check, because otherwise our lien is in jeopardy. So these are all of the things you have to pay attention to so you can predict and preempt any potential problems.
Sure. Some more just promulgated stuff here. You know, we obviously don't insure the property condition of the property. We don't, if it's a construction transaction, we don't insure the labor and the materials that are on the property. We're not a builder's risk or homeowner's insurance. Go on. Liens, leases. So we're also going to identify any mineral leases. I will get to that. It'll be on the next slide. But for the sake of this, water leases, ag leases, those type of things are excluded. I'm sorry.
Solar.
So we'll get to that.
Okay.
Those are excluded from a title policy. She's antsy.
I'm antsy about the solar panel stuff.
So when you get to item B10, and I'm pretty sure that's almost every title company's number, because those first items are promulgated, right? This gets into the items that are a little more specific to your property. So this is where we're going to identify mineral leases, specific water leases that have been filed that directly impact this property. To the other question earlier, utility easements that have been filed, those items. These are the more specific items that impact your property. Also, these are the items before we have a survey, or even if we have one, that are going to, a survey can clean up. So there may be easements to GCEC, but this has been parceled into a 10-acre tract out of an 80-acre tract. And now we know that easement that GCEC applied doesn't apply to this, and it can be cleaned up with an accurate survey. So this is just an example of the different types of leases. All right, C is for cure. These are the items that are outstanding. These are the items that we have to address as a part of the closing, either before or at closing. Okay.
So those that are lenders on this call, C is what you've got to pay attention. These are like your loan conditions. These have to be clear before the transaction can fund.
Can I back up for 1 second?
In slides?
For the lenders, and and even for the forward or backwards, whatever. By the way, when we have T47s that say there's been a shed added, a pool added, or whatever, this is also where we're going to take exclusions for any items on a survey that we don't see. So sometimes we can try to accept a survey that's had changes, but we're going to, as a title company, we're not going to take that liability on. So we're going to have an exclusion on the title policy listed here. Depending on what that item is, a lender may or may not accept that. No lender is going to accept if a pool has been added. The rule of thumb, especially if you want to make sure any lender is going to accept it, is if the item added has value that they're going to take into consideration, you already know you need a new survey. I can already tell you that. I would say lenders are case by case on what they will allow for an exception here. If it's a lean-to, I'd also use discretion on what you put on a T47, but I'm not saying that out loud. Those items, this is where it's going to show up, and this is what a lender is going to tell us yay or nay on too. So this is where it's going to appear. Okay, go back to C. So the first couple items on C, these are also promulgated items. We've already talked about it. We're going to make sure taxes, we're going to make sure there's access, all that stuff. Next one. Next one. We're going to skip to the highlights. Okay, so this property in this example has a lien, also has a judgment, and it has a mowing lien. So we have three things right off the bat that we need to address with the seller. There's also a fourth item, require the organizational documents, because if you saw in this example on Schedule A, the seller is an LLC. So
okay, so you go to do your net sheet and you're at a listing appointment and you find out that they owe money on the house. Chances are they forgot about the judgment and they had no idea that there was a mowing lien.
That's right. So mowing liens, especially City of Denison, City of Sherman, both, they're so, if I have any city employee friends on here, forgive me, they're so terrible how they file those liens. So I don't want to bog down on those. But if
my whole point is you get Schedule C, you better update your net sheet, because now you know what the seller is going to have to pay off prior to the closing transaction. The day they get the CD or the HUD, depending, is not when they should find out about all of these liens that you guys got notification of 3 weeks prior to.
I would say the day you get the commitment should not be when you're finding that out.
Yes.
You know what I mean?
Yeah.
So judgments, they're going to appear on a title policy for buyer, or on a, title commitment for buyer and seller. We disclose them for buyers too, because going back to the other thing we talked about earlier, we don't ensure that this property is going to be their homestead. So we have to take into account that a judgment may attach to your purchaser's property in case they're buying an investment or land or something else. A judgment for a property owner seller that applies to them on their homestead can be worked around, is the best way to say that. I won't bog down on that, but you need to look at these things, just as Michelle said. Are they your seller, or are they the seller on the contract? Are they being addressed? Are they being cured? If you're a buyer's agent, call us, say, I didn't know all this stuff was on there. The seller didn't tell us. They're not supposed to tell you. Well, they don't always tell you, but find out from the title company, are they addressing those items? Yes, the seller's aware. Don't worry about it.
Some of the things that could show up on here from a buyer's side. So again, lenders, or if you're on the buyer side of the buyer or seller side of the transaction, child support, IRS liens, alimony. We do have some cases where alimony is awarded.
And government liens, local, state, and federal,
have to be paid.
There's homestead or not, those are going to have to be addressed. So again, in your listing appointments, sometimes those uncomfortable questions have to be asked, but your client is going to appreciate it when you get this information up front.
We as a lender, and I can't speak for others, but I know that your local lenders are watching really, really close. There's some federal reports that we pull when we begin the transaction, not at the end. We don't wait till we get a title commitment to be looking for some of these things, but not all of these things can be found and seen prior to getting a commitment. So again, lenders, buyers, agents, sellers, everybody's got to pay attention to this page.
I was off camera when I just chipped on this chair, so I'm glad no one's.
Oh, good.
Okay. Next
Except
time.
you just told everybody you tripped.
Oh, well, I didn't see it. Some promulgated things, all these items you see here are typically covered through the documents they sign at closing. So Schedule D is for disclose. We are required by TDI guidelines to tell you who our shareholders are and who our underwriters board members are. So you'll see a bunch of names on there. If you didn't know, go to one more screen. If you didn't know that Doris Caston was the president of Red River Title, well, now you know. So it also, you're going to see policy quotes here. We do try to make them as accurate as we can to what we know. So in other words, it's accurate to the sales price, it's accurate to the loan amount we have. Those things change as the loan amount changes or as requests are made, those things change. That's really it.
That was a lot of information in a very short period of time.
And I talk fast.
And you still didn't cover my solar panel that I told you a million times to cover. But let me just, yeah, it was on Schedule C, but I was waiting for you. So let me just tell you, if you pull up to a piece of property and you see solar panels, and we're starting to hear this more and more. In fact, we had a transaction the other day where there were solar panels, and I think the seller still owed like $40,000 or $50,000 on the solar panels, and they wanted the buyer to pay for the solar panels. And the buyer is an FHA grant, hardly any money, barely getting the house. It's not gonna, those solar panels, when you see them, you need to be asking those questions and figure out, do they own them? Are they rented? Is there a lien on them? And I promise you, 95% of the time, the seller doesn't know the answers to those questions. All they know is that they're selling electricity back to the utility companies and they're not writing a check every single month. That's all they know. So you need to do your due diligence and figure out, because it will come up and part of that transaction. And we're seeing more and more of that.
I'm going to piggyback. So every solar panel company is a little bit different. Okay. Almost across the board, the loan that a property owner takes for solar panels is considered a personal property loan. So things I've dealt with, leading up to closing on solar panels, I've dealt with several, just like Michelle said, where they just expect the buyer to take over payments for them. Okay. The solar panel company may file a valid lien or a UCC. A UCC lien is a lien against personal property. So we're going to require that to be collected, because even though it's personal property, it is attached or affixed to the real property. So that's where a seller gets upset with us, because the other thing I hear from sellers is, I was just going to keep paying it. Yeah, right. Like, you're going to move away and pay for solar panels that you don't, on a property you no longer occupy? No way. She's exactly right. I've dealt with many different solar panel companies. They do have a release of or a termination of their UCC when they're paid in full, or obviously there's paperwork that the party signs either when they get the loan or when they're paid, when the loan is paid off. Don't be afraid as a buyer's agent to ask the listing agent for their seller to provide that info, because they will come and show up and rip those solar panels off that roof if there's an outstanding lien, because not every solar company does file those UCCs because it's a personal property loan.
And then I don't know from an insurance standpoint if there's any coverage for any of the damage done to the roof in the event that happens.
I have 2 or 3 solar panel contacts just for general information. So
Yeah,
anybody have any questions, I can put you in touch with them, or I can give it to Michelle.
I did, speaking of solar panels, have a quick conversation with appraisers in regards to how we're valuing those panels. So maybe that's another class. Does anybody have any questions or class suggestions? Because I'll continue teaching as long as you guys want to learn, and I'll put those classes together and roll them out. And for the most part, I get the classes CE approved so that you guys have the ability to take the class and get CE. So Anybody who, so if you have a transaction question, castleteam@guildmortgage.net is your go-to. If you have a referral, it's castleteam@guildmortgage.net. If you have any class questions, any business coaching, any marketing strategy sessions, or any of that you would like, I have a link to a calendar that I'll email back to you. That's my jam. That's my passion. The team does a great job taking care of your clients so that I can be available to you guys to help support you in your business. And then if you've got any title questions, so my email address is mcastle@guildmortgage.net. Again, michellecastle.info gives you an idea of everything that we've got going on. So just raise your hand and say, I need this to help me be better in my business. And I'll see what I can do to help put that together. And then if you have any title questions, Sean is your go-to for that, Red River Title. And his email address always cracks me up because it's Skin Cannon. That's the way I always remember it, Skin Cannon. So it's Sean Kincannon, but Skin Cannon is the easiest way to remember it is it RRT or Red River Title?
RedRiverTitle.com. Okay. And an easier version is info@redrivertitle.com comes to me too.
There you go.
Thank you all.
Because he's full of info.
Thank you, Michelle, for having me.